Okay, so I wanted to show you the 34-day BTI, which is an indicator I use to identify potential resistance levels in the FTSE. So here we have the chart of the 34-day BTI, which is the orange line, and together with the FTSE 100 index in blue. And as I was saying, it's very important to understand this 34-day BTI, because when the market goes up, when the FTSE goes up, this indicator will go up. Okay, and you can see there is a level here at 400. We've got a red line here, which is a 400 level. And in general, when the 34-day BTI goes above that level, it means the FTSE is in a resistance area. Okay, so at the moment we can see the indicator is just below 400. It's been going up with the market, basically. So if we look at previous example of this indicator, I call it a trend reversal indicator, because if the FTSE is at resistance, then it will turn down, and that's why it's called a trend reversal indicator. It is not a timing indicator in the sense where as soon as it goes above 400, you can sell. No, it doesn't mean that. It's not like a timing in that sense. Sometimes what happens is, as you can see, I think it was in May and June, the indicator went above 400, but the FTSE didn't peak. As you can see, the FTSE continued to go higher for, I think it was 2 or 3 weeks later. So from the moment the 34-day BTI went above 400, the rally in the FTSE did not stop. The rally continued for a bit longer. But then you can see what happened. After that, the FTSE, once the FTSE peaked in June, we had a very long decline, as you can see. So that's why I call it a trend reversal indicator, because it means the trend will turn down. And it depends if we are in a bull market or in a bear market, because this decline back in June lasted, I think it lasted July, August. I think the bottom was in November, if I remember. So it was quite a multi-month decline, that one. Okay, but sometimes the decline will be 2 weeks, 3 weeks, or a month. So it depends where we are. If we are in a bull market and this indicator goes above 400, the decline will probably be short-lived, maybe like 2, 3 weeks or 4 weeks. Whereas if you are in a bear market, it could last months. Okay, and the other thing is that with this indicator, it doesn't need to go above 400. You know, sometimes it will stop just below 400, like for example where it is now. You know, sometimes it will stop there and start declining, and the market will turn down early. So it is not like, again, a timing indicator, because what it's telling you when this indicator is at 400 or higher, you need to prepare for a change of trend, which is from up to down. That's what it's telling you. Okay, but you have to take into account the fact that sometimes the market will continue to rally for a week or two, you know, after it becomes overbought. So that's why it's not a timing indicator, and you need to be prepared for that. And if we look at the chart, you know, that's a FTSE 100 on the daily chart. Okay, I am not saying that this is the actual pattern. I put this label, those labels on the chart, because I think it's a pattern that, you know, there are various interpretations at the moment. So I can't say with certainty that this is a pattern. It could be something else. But anyway, it's one of them. Okay. And if I go back in June again, and you can see that was the last time when the 34-day BTI was overbought. Okay, so we had this long decline. And in fact, the lowest was not even in November. It was 28th of October, the lowest level. Okay, but the rally started in the beginning of November. And basically, when the FTSE rallies, that indicator will go up. Okay, so that's why where we are now, the 34-day BTI is just below 400. But as I said earlier, it doesn't mean it will stop there. It doesn't mean that the FTSE will just stop and reverse. It could go higher. as you can see, if this pattern is unfolding, for example. Again, I am not saying this is a top wave count, but it's one of them. And the reason why I think that this is one potential pattern, which is like a kind of ending diagonal, because you have a very long first wave, a short second wave. That third wave will be shorter than wave 1. Then we'll have a pullback. And then the fifth wave, that one, will be shorter than wave 3. Okay, so that's why I call it an ending diagonal. Not a textbook one, because the wave 1 is very long. The reason why it's long is because we had some major news, the vaccine. Okay, that's why it's extended basically. If we didn't have a news of the vaccine, it wouldn't be that long. And the reason why I think also it is an ending diagonal is because the 34-day BTI is nearly overbought, nearly at 400. And that is because if that indicator is at 400, it tells me that upside is limited. Okay, maybe the FTSE will go higher, but upside is limited. So that's why it fits perfectly with an ending diagonal, because an ending diagonal is a terminal pattern. And that ending diagonal would be wave C, as you can see, of an ABC. And you can see already it's above the top of wave A, because this is A, this is B, and then we are near the end of wave C. Okay, as I said, at the moment, I'm not 100% sure, or even 80% sure this is the actual pattern, but it is my favorite pattern at the moment, considering that the 34-day BTI is near 400. Okay. Now, when you are in a market like this, okay, and you short this market, because there will be a potential for a reversal. I'm showing here this pattern, but it could be something else. It could be that we are already at the top and the market will fall, the FTSE will fall. Okay, so if you are shorting this market, obviously, the first thing you do is to realize that it's very strong. We can see the S&P 500 is making new high. We're talking about all-time high. Okay, so it's a bull market basically in the S&P 500. On the FTSE, you can argue that it is not a bull market because it's wave 4, and it could be wave 4 in brackets. So that is like a counter trend that is going to end, and then the bear market will resume, because the FTSE is really a long way from an all-time high, unlike the S&P 500. So that's why maybe the FTSE is still in a counter trend rally, and then it will decline into new low in the next few months. It's possible, and that's why we've got wave 4 here. But this could change, At the moment, that's my interpretation. Now, what I was saying, if you want to go short, okay, say for example, the market start doing this pattern, so you get a pullback and then another rally, and you are trying to go short where we are now. And so the first thing you have to do is to really reduce your size, because it's bullish. It's not bearish, it's bullish. The pattern may tell you it's nearly the end of that rally, but still it's bullish. So what does that mean? It means that when you have major news like we had in November with the vaccine, and now the long-term investor, the fund manager, will be buying. They will be buying the dips. So, and even if it doesn't dip, the fact that the S&P is rallying is enough for them to convince them that we need to get on board, otherwise they are going to miss the rally. And that's why the FTSE is strong. And if you look at the main driver in the FTSE 100 index, like for example oil and mining stocks and banks, they are all strong. That's the reason why, because those fund managers, they are buying for the long term, and that is making the FTSE strong. So as a result, if I was saying, for example, that the FTSE is going to decline to do wave 4, yes, it will probably do it, but it could do it from a higher level. That's what you have to remember, because we are in a bull trend here. Sentiment is bullish. The S&P is making daily new all-time high. When it's bullish like that, yes, there is an opportunity to catch a down move, a decline. There will be an opportunity, but it's risky, it's more risky, because the market, the trend is up, and the market is strong. So yes, there will be a pullback, but this pullback could come from much higher level. This is a problem. It's difficult to time because there is strength in the market. Okay, so even so, the 34-day BTI is nearly overbought. I am still cautious to go short, and that's why I'm telling you that if you are going to go short to catch wave 4 down, you have to do it with a smaller trade, because it's risky to go short here. Now you can see that the reason why we go short, in a strong market, there is a reason, because, the reason is that the decline could be sharp as well. Because when the 34-day BTI is overbought and the FTSE is at key resistance and it will turn down, the decline could be intense. And you can see what's happened in June, for example. That was a sizable move. It was big. It was not small, that decline. But of course, at that point, that was on the 8th of June, that 34-day BTI was overbought. It was above 400. So you can see the kind of decline you can get. That is why there is an opportunity to short the market. But it's not an easy opportunity because that decline could come at any time, basically. It could come now. It could come in a week time, or it could come in maybe 2 weeks. And that is a difficult part because, as I said, it's bullish. And when it's bullish, and because you've got the vaccine news, you've got like maybe the stimulus, you've got the various things going on, people will just push that market higher, and even so it is like overbought, they will still, and that's why it's difficult to short, basically. So my advice in that situation is prepare for the decline, and the best way to do that is with a small trade. So for example, if you bet like 10 pounds a point, maybe you would do 3 or 4 pounds on that short, you see, much smaller, just because there is that risk that it will move higher before going down. Okay, and that's what I would do, basically.